Okay, hello traders and welcome to this live intraday strategy webinar on SB Trade Desk. Mike Boutros here with you this morning. Good to be here, guys. Bernard, Dale, Jay, great to see you. So we did just get release of the non-farm productivity from the United States. 1.3% was the print. We were looking for 1.6, slightly weaker than expected, but you did get an upward revision for the previous month. So you're not seeing too much of a prominent impact so far on the dollar from the release. Unit labor costs coming in slightly stronger than expected. Again, a downward revision. So on one of them, you got a upward revision and a weaker print. On the other one, you got a stronger print and a downward revision. So it's not likely you'll see this prompt too much volatility here on the dollar crosses to start off the session. So we've got a lot to discuss. Obviously, overnight, China opening up its range on the yuan. You did see that really dominate headlines this morning as we came in. If anything, it is likely to keep the dollar afloat. Impact it could have on the Fed is something that we've been talking about on the desk here. It's only going to make the Fed's call for higher rates even harder. This, if anything, will put a floor under the dollar, and higher rates will only further propagate that strength. We've already seen that it started to weigh on corporate earnings. We've already seen that it started to weigh on exports, and certainly it makes it much harder for them to move on rates this year. So while the near term, you might see the dollar find some support, longer term, it might push out interest rate expectations, and that could be a negative for the greenback. So we'll go over the highlighted setups from yesterday's intraday update. I want to take as many questions as you guys have. Feel free to throw them out. If there are specific pairs that you guys are looking at, Bernard, remind me to take a look at that DAX. Depeche says, morning, Michael. Good morning, Depeche. Great to see you. Yesterday's dollar, Cad, and Aussie Dollar levels superb. Okay. Well, I'm glad you're playing those well out. I actually did take a position on the dollar, Cad. I do like that, and the Aussie. Euro is actually the one that's been playing out the best, actually, of those three. So we'll take a look at them. Sharif says, good morning. Great to see you. And Vesk has some questions here on RSI. So Vesk, let me get through the setups, and I'll be more than happy to address these questions you have here on the triggers that we're setting. Pretty prominent questions, Vesk. I'm sure other people have them too, so we'll definitely go over those. All right, so first things first, here's what the dollar index looks like, or the dollar relative performance looks like as we start off this session. It's a mixed print, but you got the Aussie, which is weaker by 1.23%. The level was invalidated for the upside, so that scalp bias did go to negative after it broke below that median line confluence support. Kiwi dollar down 0.98%, Cad down 0.57%, and the end with a slight decline of 0.18%. Euro, strongest performer in the session so far, up 0.39. Again, as far as economic data is concerned for the rest of the session, you're pretty quiet. You don't have much left on tap today. You look at wholesale inventories about 10 o'clock, could shake things up for the dollar, but not expected to be a major market mover. All right, let's jump into these trades. Mark says dollar CAD playing it up and down. Yeah, dollar CAD actually over the last couple of days we have had shorts and longs on that. I still think at this point, well, let me just jump into it. Here's what the dollar index looks like. Major key support, and I highlighted this yesterday on Daily FX. It's a plain opening range strategy for the month of August. So that's how I'm treating the dollar index. The title of the article was Battle Lines Drawn, and I think that pretty much sums it. 12,071 was the exact reversal day close. That was the exact high that we ran into here on non-farm payroll Fridays. The opening range low for the month comes in at 11,987. 11,991 is a basic 236 support, and you have the median line off the lows, which is kind of sitting right there where we are right now. So this is a very basic play. And again, a break of this opening range is going to give us the medium-term bias here moving forward for the dollar index. We're favoring a downside break, but again, on the back of the news, you have momentum at support. You could see a little bit more of a pop here. This is the critical break we need to favor or to continue favoring those broader dollar shorts. Any questions on the index before we move on? Here's what it looks like on the intraday. It's been pretty ugly on the 30-minute, so I haven't really highlighted this. Again, you do have a clear-cut weekly opening range just above support, 11,989. Remember, 11,987 is that 236. So certainly the levels are all kind of ready to go. Just need a clear of this range to clear this break. Looking at the docket, you do have retail sales on the 13th. That's probably going to be the major market mover. If it's going to be an event risk or an event-driven break, that's going to be the key that we're looking for on the 13th there with the retail sales data out of the United States. All right, so let's go through this real quick. Dollar CAD. Here's what the dollar CAD looked like on yesterday's scalp report. Here's what it looks like now in the daily. So we noted that all the targets were taken out on the way down. We came right into the lower median line parallel, just a couple of pips off that 236, which was at 129.56. And you saw a nice little hold in intraday price action. The risk was to the upside as of last night. So we said, our bias remains weighted to the downside. The pair may attempt to stage a near-term recovery here, looking to sell the rally. So here's what the intraday chart looked like. That 129.94 where we bottomed out yesterday, just ahead of that 236 you're looking at here, was actually a nice, just clean 618 retracement of the advance off the lows that you made from this swing. Okay, so you find some support here. The break back above 130.36 had me looking for short triggers somewhere below 131. And here's how it worked out. Okay, so you did prompt a rally right off of that 618. It took you through this region at 130.30. So now you're looking for shorts while below this region. Remember, 131, 131.08 was going to be our bearish invalidation level. As long as that level held as resistance, you're looking for some short triggers. You got a few on the 5 minutes on the spike here late last night on the back of the release of that China decision. And you had a couple of opportunities. Mark, I didn't play the rally here, but the limits did hit. The first one at 30.30, and the second one was just on the inside, and the close here was right at the 130 handle on the way down. But again, nothing's changed, right? Heading into the U.S. session, you're still looking for a downside bias below 131. If this breaks, not really interested in playing this range. I'd probably be looking for short exposure back again at the upper median line parallel. But near term, we'll look to see if we can hold that 131 as resistance for the dollar CAD. A downside break, you'll finally look for that 236 at 129.60 basically. And then you also have, the median line off the highs, which comes in right in that region as well. So nothing's really changing as far as the dollar CAD setup. It's actually probably been the cleaner setups of the ones that we've been following on the intraday charts. The euro, we're working with a breakout scenario, but certainly for the dollar CAD turnover, the hallmarks are there. The hallmarks are there. You got to clear this major support here. And if we do get below 25.60, there is a lot of room to the downside for this thing to give us a more significant, more meaningful recovery to the downside. As it stands, that's still your barrier of entry. Okay, so any short exposure you take, you want to start cleaning it up as you get back into those lows. This is pretty critical support near term for the dollar CAD. Questions on the loonie? That data is pretty quiet for the rest of the week. You do have new house prices on the 13th, right after retail sales here in the United States, but unlikely to be a major market mover for the loonie rather. Sharif says, what happened with China? So Sharif, they actually opened up their trading range on the yuan to let the yuan depreciate further. Okay, that's going to help their exports. And broadly speaking, it's been something that the global markets have been really watching. So it's a pretty big deal. It's a pretty big deal. They opened up to 1.9, which is like the widest range that we've seen so far on record. It's a form of easing, Sharif. That's all you need to know. China's coming out trying to ease more. Remember the large-scale devastation that happened with that correction that we saw over the last couple of weeks, guys. Not only did families lose massive amounts of wealth, but a lot of these were leveraged, okay? A lot of these people got in on account of this being a government-led rally. And once those positions got liquidated, even if the market snaps back, they're no longer holding those core positions. So, they're going to try to do what they can to show that they are still in control, to show that they still have their hands on the gas and that they're trying to support the economy. But broadly speaking, not a good sign. And from the people I've talked to on various desks here in the city, a lot of them are expecting further actions from the PBOC. Okay? In case the world didn't have enough central bank intervention, now you got one of the other larger central banks out there really starting to shake things up. So it's going to make headlines. It's going to definitely be on the front pages of all the financial publications that you read today, Sharif. for sure. Are you waiting for the CAD to play out or look for shorts even later today? Eileen, I'll be looking for shorts later today. I kind of do want to see what today's close looks like, but if we do get a rally into resistance and then we get a compelling short trigger below 31, there's no reason not to take it. There's no reason not to take it. I just want to say one thing also, guys. Keep in mind the quarter of the daily ATR. I did get stopped out of a couple of positions just because, I had the stops at like 20 pips, and literally like 24 pips I got stopped out at the highs. So it can be kind of frustrating. I know the ATRs have been contracting on some of the dollar pairs as the ranges start to get tighter, but make sure that we're keeping our stops at an objective level and give yourself a little bit of a cushion. I know there's been a lot of chop lately on some of these dollar crosses. Eileen, great to see you, by the way. Says, good morning, Mike. Back now. Hope you're well. Need to get my chart eyes back. Well, you're in the right place, Eileen. So it's good to have you back in the room. Mark says, haha, central banks, hashtag fight. All right. Okay, so that is the dollar CAD. If any of you have any other questions on the Loonie positions or Loonie setup from last night, levels are the same. Still looks good. You're going to favor downside sub 131. Need a break above the upper median line parallel to get the upside back into focus. Looking right down the list, next up was Aussie Dollar. Here's what the daily chart looked like. Not quite what we expected. Did not really want to see this reversal, to be honest with you. On this one, I also did try to fade the China data, and it would have worked out into a beautiful scalp, except it did get stopped out right before the upswing. So fading the data wasn't necessarily the best move to try last night on the back of that major release. But here we are with an outside reversal candle taking us right back into the median line structure we've been following off of the April-May high. So for the Aussie dollar, not really interested in touching this one either. If anything, again, this has actually made a clear opening range, tested the opening range, and I would call this a failure of a break of the opening range for the month. So another trade that is giving us a nice monthly opening range right above support. At this point, from a scalp standpoint, you're invalidated on the long side, and that invalidation level was 73.50. So the break below 73.50, no longer looking for long exposure at this point. Near-term support 73. A break below that, you'll look for the weekly lows from last week. And that takes you right into the 72.58, 72.60 region. But the China data, even more so for the Aussie, is going to be more significant, right? One of their largest trading partners, and certainly on the back of that release, the Aussie is the one that saw the biggest tumble once that data came out. So I'm looking lower. I'm looking lower below 73.50. I haven't really been taking any positions on the Aussie per se. I'm glad that Deepesh, you got some moves on this. I mean, if you caught the release of the PBOC last night, it was a beautiful short. If you caught it early enough, and even the break below 73.50. While you did get a really near-term short trigger, long trigger right there, it didn't last very long. Oh, Aussie dollar invalidated long side. Says Mark. I have to rethink the Aussie CAD long. So I don't want you to draw it across conclusions across all the Aussie pairs, Mark. But from my standpoint on the intraday, I would need to get back above 73.50 to get constructive. Again, it's rule-based, right, Mark? It's not my opinion. It's just the disciplines of the strategy that we've implemented over time. There was a nice lower median line parallel. You're below that. The breakout that we were working under the assumption of the upper median line parallel break, specifically here on the daily, okay? Now that's been invalidated. You're back below that. And not only that, Mark, we came back and tested as resistance and it held. So I need to get back above this before I start to buy longs or buy pullbacks. I do think that the Aussie, might not be ready necessarily to turn over just yet. So because of the lack of clarity there, I'm just going to sit on the sidelines for this one. We got our hands full with the euro dollar. I think that's a much cleaner setup. The dollar CAD setup that we looked at, I think that's a cleaner setup. Aussie Kiwi is just begging for a move. We'll take a look at that. But Aussie dollar right now, I'll be on the sidelines. If anything, compelling short trigger while below 73.50 with a break below 73 is kind of what would solidify the turnaround here. Mark saying, I understand. I think this or I just think this chop is not enough conviction for me to throw away a bias that has been bullish for days and weeks. And Mark, I don't want to deter you from doing that. Remember, man, I'm talking to you from an intraday outlook, meaning the next couple of horizon hours, whether it's next 3 hours and next 12 hours. The conditions that would need me to be more constructive on this would be a break in RSI back above 60 and a move back surpassing 73.50. Very simple. Again, don't misunderstand. We are for sure, we've come into a nice level of support here. This lower median line parallel has prompted some really nice recoveries, and this thing could reverse and break right through, and that's fine. As soon as we clear 73.50, I'll be back on the constructive approach. As it stands right now, you're going to want to see a little bit more conviction with that reversal and pull back above 73. All right, Mark says, all right, got it, understand, of course. Right on, my man. Okay, Sharif wants to get through these pairs. No problem, man. Last but not least, before I go into dollar yen, Sharif, I do want to cover the euro dollar. And that's been, like I said, one of the better setups that we've been watching. So this was on the radar charts on Sunday, and the major level on Sunday that we highlighted was basically 110.30. It was the confluence of a 100-day moving average and the upper median line parallel that you see right here. You can see that. Well, here's where it was back on last week on Thursday. Okay, we were trading at 109.32, and again, that confluence has been there for a while. We've been watching it, right? The 100-day moving average, 110.20, 110.30, the upper median line parallel. We came in on Sunday even closer, right? A little bit of a pullback. You're looking at the momentum trigger still there, looking for resistance right up at 110.30. Finally today, getting the push through. Here's what it looked like last night. And here's what the euro dollar looks like right now. Okay, so you're getting that punch right through. Momentum hasn't closed. It's very important that we note this. Hasn't closed necessarily above that trigger line, but certainly does look like to be making its progress through. So while above this region, you got to still remain constructive on the euro. It looks really good as far as the intraday levels are concerned. Here's what we were looking at last night, highlighting resistance into 110.45, and that's basically still the level that's holding. We just punched through right now, 110.58, but this is a 618 extension off of the lows. So if you take the low that you made in July and take the low that you made here in August, the 618 extension came right along a sliding parallel for that same structure. Okay, and here's what it looked like on the intraday. So again, there's the highlighted region. You saw us give it a nice pullback. There was a very compelling hold ahead of 40 and a 5-minute RSI trigger that gave out to the upside, gave you a nice constructive trigger to buy against the lows from Asia. And certainly first target would have been right again at 110.45, 110.40, which is kind of where this thing stalled out. And here we are trying to push through. I wouldn't be looking necessarily to take any new long exposure if you're not holding it already, guys. Topside target on this stretch is 110.82. Which is basically a nice pivot range that we've been watching, and a swing high from the 14th of July, and then right up into the 111 handle. But near term, you really don't have a low to trade against. So we'll be looking for a pullback here. We'll look to remain constructive while above this region, essentially that sliding parallel. And we'll be looking for long triggers and momentum to try that long against the, basically you're going to be looking against the European low. On a turnaround, excuse me, on a turnaround scenario, okay, the only thing that would invalidate this trade, like I said, would be a break back below this region. What would put us on the short side of the trade? You would still need a break of the weekly opening range low. So we'll be looking to buy pullbacks while above this region. If we get back below that median line, not really looking to play this, you would need a break below just the objective weekly opening range, and that would open up a short side exposure. Momentum still looks pretty constructive on this, and if this is going to be a breakout, you have a lot of room. Yesterday actually invalidated the initial monthly opening range here. So again, objectively, you want to stay constructive above 109.90, 110. But the euro looks pretty good. Looks pretty good to continue favoring buying pullbacks on this thing. No change to those setups from last night. Any questions on the euro before we move on? We made some good time here. We got a lot of time for your questions. So here's what the euro dollar looks like on the 5-minute chart. Real quick, I just wanted to show you this. I was looking at it right before I came in. Here is a basic trigger, and I'm looking to see if we can get a short break here to give us a decent pullback. I mean, your ideal stop would be against the European lows, but we'll see if we can get some pullback here to get exposure back on the long side. At the end of the day, you know, it's still a constructive trade while above, specifically while above yesterday's New York highs. Sharif, I'm not sure what you mean. He says daily resistance on the euro dollar. At what level do you go bullish on a longer term time frame? What do you mean by longer term? You talking like weeks, months? For me, we would need to essentially go over the close highs from July, Sharif. I would need like to push through 112 essentially. The close lows comes in right around 111.50, but 112 is kind of what I would need to peak, at least to start looking on a much more constructive approach. There's nothing that's really super bearish about this trade in general, even the pullback since the May stretch. And I keep saying this every month, and people get really excited on these drawbacks, but the momentum signature, in my mind, has been rather clear that we don't want to necessarily look for the resumption of the broader downtrend just yet. Every pullback, support ahead of 40, support at 40. Here's another trigger break on the long side. So, you know, I don't necessarily want to look too far out, Sharif. I'm much more of a short-term guy. Near term, it remains constructive above that level that we talked about. For us to get much more constructive on the broader approach, you would need to break the larger consolidation that we're in, period. So depending on time, you're looking way above last month's high. But the initial, to continue favoring the top side, we would need to clear this region right here. This would be a nice long bias play for the month. Make sense? Sharif says, my bad. I'll start typing full sentences. Haha. Thanks. You're more than welcome, Sharif. It's good to see you in the room. All right. Andrew Smith saying Euro Pound hitting key levels as well. Let's check out Euro Pound. It's funny, Andrew, because I call this the grandpa trade just because the ATR is always so tight, 67 pips daily. Man, we're looking at some pairs that have a 67 pip quarterly ATR. So don't mind if I pick on you a little bit, but we'll take a look at the grandpa trade here. Look, at the end of the day, this one looks pretty good as far as where we bottomed out and the crazy divergence we've been getting. Bear with me one sec, guys. Okay, so this actually is pretty interesting for me. I have the 50-day moving average coming in just higher, right around 71.16. But more importantly, this is sort of a confluence region that you want to pay attention to. It's a 50% retracement from the June decline. It's also the spike high that we made here on the 27th of last month. And you also have the median line parallel off the lows right in that region. Nice trigger break in momentum. Yeah, this looks pretty good, Andrew, for sure. Yeah, I like it. I'd be looking for initial resistance right here. Like I said, also keep in mind the kind of swing close high that you made here. The close actually is at 71.23, so that lines up pretty well with that 71.16, 71.11. at 71.16, 50-day moving average. Lines up pretty good with initial resistance there, but yeah, I think you stay constructive above that monthly pivot, looking for that rally into 71.50, basically the median line / those swing highs. Looks pretty interesting. Again, not my favorite trade, and intraday, it's real tight. I mean, even if you try taking a quarter of that, it's going to be a super tight trade. Okay. Let me jump more into your questions here. You guys have a lot of pairs that you want to look at. Dollar yen for Sharif. Yeah, so dollar yen wasn't highlighted yesterday on intraday charts. We've been following it all last week, if you guys remember. It's kind of stalling out, and the ranges continue to contract. Another one where you're only getting 17 pips on a quarter of daily ATR. This is what I can say about dollar yen. If it's going to hold, okay, and if our objective, or if our outlook, rather, with this pitchfork is right, this is where you'd want to find some resistance. That's all I have to say. You have some ongoing momentum divergence as price action pushes into a new high, higher high. You're still making a series of lower highs, right? And you are testing the upper median line parallel for the formation off of the highs that we made for the month. So if we're going to get a hold, this is where you'd want it to be. I don't have any necessary triggers on a 5-minute that are panning out because you're getting a lot of back and forth. Here's sort of the 30-minute trigger I'd be looking at. And we'll see if US opening range gives us anything on this one. We'll see if the US opening range gives us anything on this one, but it does look like it's ready to give us a little bit more of a pullback. Again, even the momentum here on the divergence that you're seeing on the 5-minute chart is panning out. We just need a little bit more of a concrete downside break. Momentum still holding 40 support. It's 60 resistance too now, but that's going to give us hopefully a nice, even cleaner opening range for US. If it's going to hold, like I said, this is where you'd want to see it do it. Okay. We couldn't invalidate the long bias until we get still below this. Remember, that was kind of the objective. And on the Sunday open, the report highlighted that we were at support, right? So you're at support, you're looking for a rebound to sell. The rebound just kept going. There was one short trigger that panned out here. We went over this yesterday in the webinar. You barely squeezed out a 20 pip pullback, like barely. So I'm going to need a little bit more conviction. We'll see if we can get below 50 in momentum. We'll see if the opening range break is compelling. But near term, if you break through these highs, look for the close day high, or the high day close rather, and that comes in at 125.56. And then the measured move, the consolidation that we had here from March into May, takes you into 125.70. That's kind of almost where we tapped out. So the levels are super clear on dollar yen. It's just this thing is stalling. It's stalling. And right now we want to see this resistance hold for us to continue favoring, looking for short exposure here on the yen. Any questions on this, Sharif? Does that make sense? He says, yep. All right. Yeah, definitely something I'll be watching. You might get this thing stalling for another day or so as you get into the retail sales, and that could be the trigger to push it through. But, I'd want to see this 125 level hold near term for resistance. If it breaks, like I said, there's really not much on tap until you go into that confluence region, which is basically the highs that we made for the year. Okay? And that 100% extension as well comes in at 125.67. In any event, the intraday update from Sunday, the levels are exactly the same, guys. No change on that for the dollar yen. Okay, so Vesk, let me take your question here. My man has, good morning, Michael. He says, I have two basic questions about triggers, if you get a chance to address them. When drawing triggers on the 5-minute chart, I pick the high in price from the previous session and the high in price from the current session and connect those 2 points on RSI. Is that correct? So before I go into your second question, Vesk, it's not necessary that the highs and lows be the highs for the price in session, more so, but the highs in the price themselves. Does that make sense? So if price peaks, if both peaks in price are in the same session, then that's what you use. I don't want you to stress, oh, I need the New York opening range high or the New York high and then the Asia high. It doesn't necessarily need to stretch over sessions. In fact, peaks that are made within the same session are typically going to be even stronger triggers, just something I've seen over the years. The second question, so he says, yes, that makes sense. All right, cool. The second question says, let's say RSI comes and breaks through above your trigger, and you take the trade, but after a few candles, maybe 30 minutes later, the price reverses and RSI breaks back below your trigger. Do you redraw the trigger through the new highs in RSI, or do you keep the trigger as is? Do you stay in the trade or take a small loss and exit? Great questions, Vesk. So I'm going to answer those in the order that you asked them. First things first, if price breaks through, a lot of times you'll look for the retest of the price as resistance if it's a support break, and that gives you validation to hold. But you're asking, well, Mike, what if the RSI just breaks right through, right? Don't do anything. That's my answer to you. The only thing that'll invalidate my trade after I get in is what's happening in price action, not what's happening in the oscillator. Remember, guys, this is broadly just following price. There's nothing forward-looking about any oscillator out there. RSI, stochastic, CCI, doesn't matter what you're using. They're all backwards looking. So I will never base a trade based on this. The trade is always based on what price is doing. We're looking for this to give us confirmation, a trigger, a go-ahead, conviction. Price is always dictating everything. So once you've gotten into the position, even if the trigger breaks the other direction, if price is not giving us something to be concerned about, I'm not worried about it. Now, Vesk, if you see that the trigger gives out and all of a sudden you've blown through the highs in price, that's something different. Now you're seeing prices invalidating a resistance level, a key level that you're watching, or a trend line resistance, or a longer term moving average, things like this, then sure, yeah, you can jump out of the trade. If it keeps going and you still have the same bias, no problem jumping back in, right? We want to keep a happy medium of where we're not trigger shy, but at the same time, if the market's saying something, we got to listen. On whole, Vesk, and I don't want to, just to put this as a blanket statement, on whole, I am a big advocate of stick to your guns. If the trade setup is there, you put your limit, you put your stop. Once you're in the position, let the market play out, right? But if there's upcoming data, if there's clearly a change in behavior and momentum, a clear change in behavior and prices starting to invalidate, where you're seeing a sudden surge that's data-driven, that's driven by some sort of market digesting something, at that point, there's no reason for me to wait out the stop. I'll jump out. Vest, does that help? I want to make sure we're on the same page there. He says, yes, it helps a lot. Right on. All right. Great questions, Vesk. I'm sure there's other guys in the room who have the same question, so always feel free. He says, thank you. Hey, you're more than welcome, guys. My pleasure. Sharif says, what times of the day that you scalp? Do you get up earlier than this and get the London session in, or is it early US enough? So typically on the US turnover, I actually like getting into some positions as Europe is closing, which has been kind of weird lately because 11, 12 o'clock, you'll see that last stretch sometimes in US trade before it starts to fade. So the close of London into New York is something I'll always watch. The Asia open, so excuse me, right as I'm doing that scalp update for you guys on SB, I'm actually getting in and out of positions right during that time period. So actually right after the release of that report is when the China data came out. The rally in the dollar pushed us into some nice levels. Dollar CAD short was taken at that point. Aussie I got just kind of really ticked me off because again, I got long and I just brought up the stop really too tight. Okay, and then we just got stopped out there. So, it would have been a perfect 23, 25 pip scalp right off the lows. In fact, this is a 50, 60 pip range. So it would have been a nice trade to the upside there back into resistance. But long story short, that one didn't pan out. Played it a little bit too close to the chest there. But those are the times typically, Sharif, that I'll trade most actively. The UK US turnover and then Sydney into the Asia Open has typically been a strong play. You get a lot of plays during the London Open, Asia into the London Open, a lot of plays. In fact, like 80% of these positions can be taken, or you can have some sort of scalp setup in that turnover. Maybe I'll take a couple of months and head over there for a while since they're juicing all my positions. But I think that's been one of the more beneficial time frames. All right. Bernard had a question early in this session about the DAX. Says I'm short from 11,605. Stop at 11,450. I love the in the money stop there. What's your outlook here on the DAX? So here's what the DAX looks like on the near term. Like I said to you earlier before the webinar started, Bernard, I think you have some support coming up pretty soon. I don't have anything imminent. Oh, okay, we're even closer. So the level I sent you was what was that? 11,312. Today's low so far, 11,331. So 11,312, just so you know, Bernard, is actually the monthly open, clear pivot and price, and pretty darn close to the closed lows that we made here in May. Just brought this into a line chart a couple of minutes ago to check it out. So we've seen some really nice pivots along that level, and it's the monthly open. So I'll watch that for support. Also keep in mind the lower median line parallel for the structure that we've been trading in is right in there as well. 50-day moving average comes in just below. So this is a region, Bernard, where if you get into, you could see a pop, you could see a small rebound, so maybe take some off the table, keep your stops where they are. At the end of the day, if you do break here, okay, it'll be a 50 break in momentum. You have a basic support trigger that's in view as well. Again, you want to see this on the close. And there's really nothing on tap until, let's see if we can get some levels for you here. Yeah, I'd probably be looking for that 618 again. Right into this region. But this needs to break. At the end of the day, you're coming into support, Bernard. So just keep that in mind, man. So also keep in mind, guys, for newer to the room, you can always take a picture of any of the charts that we're going over here by clicking on the camera button, the top right-hand corner of your screen. So Bernard, feel free if you want to grab this chart. Those are the key levels I'd be looking at. Major key resistance still doesn't, we didn't even tag it this month. It was still 11,740, but certainly near-term support. You're heading there right now. Heading there right now. Bernard says, thank you. Very helpful. My pleasure, Bernard. Great to see you in the room. Dale says, dollar CAD getting close to 131. Yeah, we're getting up there again. We are getting up there. Let's see if we can get some short triggers up. If it plows through, again, next region of resistance, if you're holding longs, I mean, you're looking at 3150. It's not a scalp per se. It's got a big range here, but you'd look for that resistance initially to hold into 3108. That's a 618, by the way, of just the weekly range. Okay, so keep that in mind there. All right. So I covered majors, dollar yen we covered. Okay, so next on tap, I do want to just take a quick look at Aussie Kiwi, something that we were following a few weeks back is still coming into, listen, it's real close near term. It's super tight. So I don't know if you want to necessarily get involved on a scalp basis, but the intraday picture looks pretty ridiculous on this. So here's Aussie Kiwi on the daily chart. Certainly, we were talking about the pivots and these slope lines that we've been following for a few years at this point. Every tag of this region has either been met with a rebound or a serious run through. Not much time dilly-dallying there. Support, support. Here we are testing it again. On the intraday level, you're in a very compelling structure to the downside. The opening range low for the month is still way off from where we are based on the two-day rally that we set forth early in the session. Momentum holding at 60 on the rally. Here's what it looks like intraday. Doesn't get more crazy than that. So super tight. You know, there's been a lot of back and forth chop action. So on a 5-minute chart, it might be very, very difficult to, you know, ascertain clear-cut triggers. But as it stands right now, I'm just waiting for this thing to crack 111.54, and I think that'll give us a nice drop into the 111 handle. So 111.54 near term is this confluence. 111 is going to be the 50% retracement of the advance off the lows, and that comes in pretty nicely with the lower median line parallel for the current operative structure. So pretty compelling setup, kind of just waiting for this thing to give me the confirmation. I want a momentum break below 40, is just refusing to do it. That slope line that you're looking at in the daily chart, what do you want to do with that? I don't know, kind of messy. So we'll look for either a rally back into this upper median line parallel with a compelling short trigger, or more importantly, 40 break in momentum and a break through 111.50 to give us that downside run towards 111. But a trade here that looks pretty clean. It's been holding this structure now for over a week. On the top side break of the resistance structure, I really wouldn't touch it until you clear the weekly opening range high. So 112.30 in my mind would give us the conviction, to play back on the upside here for Aussie Kiwi. You look for the 2014 high day close first at 112.78, and then obviously the highs for the month there at 113.15. But another pair that's just poised. It's kind of just staring me down. I checked on this multiple times throughout the day yesterday, and it just doesn't want to give us the break yet. So something to keep an eye on. Will also be on the radar charts probably tonight on SB. Speaking of the radar charts, from yesterday's update, we also had positions on Sterling CAD and Cad Yen that were highlighting. Basically, they're all the CAD setups, but here's what those look like right now. So Sterling CAD looks like this on the daily. And basically what we wanted to highlight was the near-term support structure that you were coming into near 2032. So that's going to be the break that you would have needed to continue favoring the top side. The rally now, you're looking for resistance at the upper or the basic median line off of the low for this structure, which has been in play for months. So here's the scalp levels that you saw on the radar charts. This is near-term bearish invalidation. So on a break here, if it pushes through in U.S. trade, the resistance region we'd want to look for is right here, the upper median line parallel. This is going to be the broader bearish invalidation. So I'm looking for a possible short trigger into that region for a move back to the downside. You're going to want to see some CAD strength across the board there. So it kind of lines up with dollar CAD giving us a little bit more of a stretch into the high, and you look for some short triggers up there. This is going to be, like I said, this is going to be the bearish invalidation level. So key resistance and bearish invalidation into let's just call it 2050. The other setup was Cad Yen, and here's what that daily chart looked like. And Cad Yen made a nice clean stretch into a 100% extension off the low. It was almost like perfect last night. Here's what the scalp looked like. All right, so you came right into that 100% extension. Momentum was in overbought territory. The signal here was actually the break below 70 for a short position. Near-term support, 95.20, backed by 94.50. So you never got into 94.50, but 95.20 saw a nice compelling hold in momentum right ahead of 40. 5-minute chart gave you a very, very strong actual long trigger here, alongside a break right ahead of the European Open. And then again, it fizzled out right into that 100% extension. So still trying to stay constructive, broadly speaking. The bullish invalidation level last night we noted as 94.50. I feel inclined not to change that, guys. Typically on a stretch like this, I'd like to raise the bullish invalidation level, but we've essentially still held the same opening range for the week. So the bullish invalidation technically still needs to stay down here. I can tell you that if we break these lows, I'd be really hard pressed to get on a position on the long side until we get there. But this is really what needs to break to invalidate the long side of the trade. And there's room to the upside. If we continue higher, the soft target would just be the initial swing high that you made here in July. But more importantly, this region, 96.60 into the 96.70 region, critical resistance. Nice 38.2 off the high, 1618 off the low, and basic trendline resistance off of the June highs. So another one we'll keep on the radar for now. Again, you might get a steeper pullback in U.S. trade, but broadly looking constructive above 94.50. Eileen says, how are your thoughts for triggers to take the counter trade, i.e. euro dollar, play the short of the pullback, what would make you do it or not? All based on risk to reward, Eileen. All based on risk to reward. And that's a great question. In fact, it addresses a topic that we spoke about earlier in the session, Eileen, with regards to playing the long and the short. You heard me and Mark talking about dollar CAD, offering positions on both sides of the trade. That's fine. And I think we've talked about this here in the webinar before. The major assertion that you want to make when you're doing that is leverage. So I'm looking at the same things. I'm looking for short triggers at resistance. I'm looking for long triggers at support. But I know what my broader bias is. So if the broader bias on the euro is constructive above the weekly lows, if I'm going to play this short, no problem. Yeah, it's a pretty compelling short trigger. You might have had some divergence. You might have had an opening range break. Eileen, it's not a problem. But guess what? That position is going to be half to a third of the position that I typically will take. Why? Because if the market decides to run and the broader trend just jumps into resumption, I'm not holding a heavy position on the opposite side. I want to be able always to be in a position where if the market starts to run, and especially if I'm bullish, that I have a position where I can fade out of. Okay, I can take off a little bit here, bring my stops up, great. Take a little bit more off here, take my stops up. But if I'm playing counter trend, these positions will typically be smaller. Because if the market starts to reverse, I'm not going to take, a shellacking. I'm not going to be willing to take off, or take that loss on that full position size. Eileen, does that make sense? So I got no problems taking counter trend trades, guys, intraday. That's the beauty of the strategy, is that we can replay these ranges over and over again. But it's very, very important to keep in mind that we do have a broader bias, and that's really what's guiding our decision making. So Eileen, I hope that offers some clarity on that. She says, okay, thanks for the reminder, and yes, makes sense. Right on. Great question. I mean, it just harkens back to the basic, the trend is your friend, right, Eileen? So we would always rather, if the uptrend is to the upside, I'd always rather be buying the pullbacks. Will I be nimble and take it off resistance? Sure, but the better play will always be just to go with the intraday trend. So here we are looking at 110.82. Like I said, the near-term topside target for the euro. It looks like you're going to get that cracked. We'll see if you can get a pullback here to get back on the reentry. I'm not holding in euro longs at this point, unfortunately, but we'll see if we can continue to favor that. At this point, I'd want to say bring up near-term bearish invalidation to this, or bullish invalidation rather. This is going to be below the, it's not below the European highs. But basically you're looking at the upper median line parallel that we broke out of. So if we break back below this, which is pretty darn close, like I said, to the opening range high for the month, that would invalidate the long side for the euro. Otherwise, still looking higher. All right, guys, so I think I hit everyone's question on this front. Dollar, yen, euro, dollar. Oh, the British pound, real quick. So we went over this yesterday in the webinar at length. The rally, listen, it's at a major resistance. Again, I don't necessarily want to call the high here. There is some divergence into the resistance level with price action pressing into a slightly higher high as the momentum oscillator dropped off. But you just don't have the conviction yet. This is the major resistance that you'd want to hold. There's a huge confluence here of a couple of things. So this formation off the high has the upper median line parallel there, a sliding parallel off of that high from late July, looks to be catching things. Former basic trendline support turned resistance there as well. And on a longer term scope, the median line off the lows. You see that? All coming right there. So it's stacked. It's stacked here at resistance. You got a topside trigger right there. And do we have a support trigger? Got a support tree that looks like it wants to break out. Keep in mind your stop would need to be above 56, which is kind of what's bothering me on it. But um, this is going to be the major resistance region. If this breaks, and the broader bias for me on the sterling is to the upside on a longer term approach, but you are at resistance. So if the sterling does give you a downside crack or you get some compelling short triggers, you can look to play back to 55.30, but this is sort of the level I would need to get into to get the conviction for the turnaround back lower. The move that you saw yesterday essentially just checking former resistance, former support, now resistance. So a big region here for the sterling. I just wanted to point out as you head into the U.S. trade session, you have employment data coming out from the U.K. heading into Thursday, and the retail sales from the United States. So you get a 1-2 hit combo here for the sterling over the next couple of days. Watch this major key resistance just below 156. So guys, we'll wrap it up there. Again, we'll be on board tomorrow, 8:30, same time. Hopefully we'll have a little bit more setups in play. Keep it nimble, okay? I know we've been having a little bit rougher of a scope there on the swing side of things. There's so much more opportunity and value, guys, that is offered besides just the day-to-day entry stops and orders. Keep in mind, again, these intraday positions have viability throughout the course of all 4 sessions throughout the globe. And again, we want to make sure that we're keeping in mind that there is much more going on than just that. So feel free to contact us on SB Squawk, and as always at info@sbtradedesk.com. I'll see you guys tomorrow morning, 8:30 Eastern, same time, same place. Cheers.